What is up? Welcome back to another video on the channel. In this video, I'm going to be talking about the inversion fair value gap model, and I'm also going to be showing you guys the trade that I took today. That was a winning trade, as you can see on the US 500 right here. This was the winning trade that I took, just to show you guys proof. On my personal account I took it. And as you can also see, that was the only trade of today. I bought in buy side. I bought in around here, and I was targeting buy side liquidity up there. Here's my executions. So yeah, let's jump straight into this. But most importantly, let's talk about the inverse model that I trade. Sorry, let's go to the ES chart. So the inverse model that I trade is basically I try and find the bias for the day or just for short-term liquidity. Either one works. For this instance, I just had smaller like short-term idea of where I wanted liquidity to go and where I thought price action was likely to go to, and then once you have that, you can easily find a inverse model trade that will be perfect to run for your take profit. And the good thing about the inverse model is once you enter into a position, it normally shoots straight up to the take profit. It doesn't do a lot of waiting around. That's what I've found with the inverse model. So what actually is the inverse fair value gap model? Now, all the inverse fair value gap model is you have a fair value gap. So let's say this is a fair value gap here. This is a fair value gap. So just imagine that there's candles here creating the fair value gap. So just say this is the fair value gap right here. Yeah. Now all the inverse model is instead of a candle coming back down and respecting this fair value gap like it normally would and coming upwards, the candles come down and close below the fair value gap. Now this close below is extremely important. If there is not a close below on the fair value gap, then it is not a inverse fair value gap. So it needs to be a close below, and I prefer if it is a convincing close below. Now, over time, the more that you trade this model, you will just see by eye if the fair value gap is going to be good or not. So I normally don't like to go for tiny fair value gaps. So for example, this inversion here, that is actually big enough, but normally there are some tiny fair value gaps. I'm trying to find an example for you guys, but I can't actually see a tiny fair value gap. Like here, for example, this looks like a tiny one. Just if this fair value gap was a bit smaller, this is what I'll be talking about. So just a really small fair value gap, normally on NQ, not so ES. I don't enter into those inverse fair value gaps, and I always enter on the highest time frame possible, up to the 5 minute. I normally don't look too much to the 15 minute. That just tells me my bias. So I use the 1 hour, the 15 minute, and the daily time to get my bias for the day usually, and then I use the 5 minute, 4, 3, 2, 1 minutes all to get the entries into the market. So let me just explain this trade that I took today and why I took it. So this was a trade that I took. It looks something like that, targeting buy side liquidity here. Now, the reason I enter this trade, so we get 9:30. So 9:30 candle was right here. And let's go to the 1 minute to show you this. So the 9:30 price action was quite choppy, okay? It wasn't very clean. We didn't get a specific move to either direction today. We just kind of chopped around on the 1 minute time frame. So then I went to the 5 minute time frame, and as you can see, we were perfectly respecting this fair value gap here. Now with the inverse fair value gap model, you just want to be able to read a price action. It's just important that you note and you're able to identify mainly fair value gaps. As you can see, there's a fair value gap here and there's a fair value gap here. Now, I realized that, as you can see, price action is holding this fair value gap perfectly. We did create these equal lows on the 5 minute, but I wasn't too bothered about these. And also on the daily time frame, as you can see, we are just extremely bullish. We have just inversed all these fair value gaps here, so I'm expecting price to go to this high, even though we've already took it on NQ, but we are just so bullish, so there is no reason to be bearish on this price action on the higher time frames. So as I was saying, on the 5 minute time frame, we were just perfectly respecting all of this zones. So that showed to me that price action was willing to go up, even though we had these equal lows here. I was still willing to take a long just because higher time frame narrative. If the higher time frame was very bearish, I would not have took this trade just because there are equal lows here. Now, as you can see, we created this bearish fair value gap. So let me just make this a different color so you can see it clearly. We have this bearish fair value gap right here. So once price comes down to this point in the market, I'm saying to myself, I'm going to see how price reacts if and once we inverse this fair value gap. I wasn't going to take the trade instantly like I sometimes do if I think price is 1,000% going to go to a certain liquidity point, or I'm just everything's perfect. If it's an A plus SERP, then I will just enter the fair value gap instantly and not wait for a pullback or anything. But this, because we create equal lows below, and because we also have a fair value gap up here, I was not I was not 1,000% sure on the SERP. This was more like a B SERP, but I still took it and it still worked. So we play at the price action. I see this big move then, but then it spikes up. So I note that we have filled, we have now mitigated, we have now filled this fair value gap here. So this fair value gap has been filled, but we also, most importantly, come back, respect this order block, because as well as a fair value gap, this is also a bullish order block. We respect both of these, then price action comes up, we get a close below, but this would be my normal entry. I would normally enter like that and my stop loss would be a close below, but I just wanted to see how price was going to react if we came back into this fair value gap. And as you can see, the next candle was extremely bearish, but we got a big rejection. So I think I entered in exactly around this point when this candle came down again, or I could have entered here once I seen the rejection. So then the stop loss would be if price came back and closed below this inversion fair value gap, then that would be my stop loss, and then my target was just this buy side liquidity right here. So this was just my target for price action. And yeah, I hope that helps giving you guys an example. And as you can see, price just comes up and absolutely smashes the target. And as you can see, here is my execution. So I just go to 2 minutes so you can see I entered right here on this candle, and then we get a big move to the upside straight after my entry. Yeah, I hope that this video helped. This was just a short video explaining a bit more about my inversion model. Now, please don't go and just try and trade this model, because it does take a lot of screen time, because sometimes you'll see inverses and fair value gaps that you shouldn't be taking, but you don't know you shouldn't be taking just because you haven't had a lot of time using this model. It does take a lot of time to get used to, but yeah, it is one of the best models out there, and it has an extremely high win rate. So yeah, I hope this video helped. Make sure to subscribe and follow my Instagram.